Good day, ladies and gentlemen. Welcome to Everyday Finances with Jay. The question for today to consider is, how do you adapt to shocks in the stock market? For example, the conflict between the United States and Iran, and then when the stock market drops by a few percentages in a sustained time period. As an investor at that point, what do you do? So what happens if a correction in the stock market drops by 10 to 20%? Today we're going to be focusing on two separate methods to do that, to adapt. The first one is what I hear a lot of young investors that still has a lot of working years ahead and don't need their investment for 20, 30, or 40 years. And the first method is to ride it out. Even if 10 to 20, 30% of the value of the investment will drop, but eventually will come back because in the S&P 500, historically for the past 50 years and longer, has returned on average 8% per year, even through recessions. But that takes a lot to stomach because in order to make this work, as you watch your money go down day by day, weeks by weeks, and so on, you cannot sell it because that's when you buy high and sell low. Instead, you have to continuously put more money into the market. This way, eventually, your investment will grow back and to a higher amount, and you can count on that 8% growth. What if there's an alternative way to minimize your losses? A lot of investors have been doing this in the past year or two, in the past week, and especially since Pentagon has confirmed the death of Soleimani. What I'm talking about is to invest in gold. You don't hear a lot in the news and other social media platforms about gold, but that doesn't mean it's a bad investment. Gold, as of today, January 6, 2020, has reached an all-time high for the past several years to $1,590 for some time. So for 1 ounce, a little coin like this is worth over $1,500. And what happens is, when the stock market decreases, the value of gold most of the time tend to go up. So for most of the time, there's an inverse relationship between stocks and gold. So when there's international strife or another reason that will cause the stock market to decrease, the gold price tend to increase. Let's imagine if you have investments in gold and stocks and something happens that you cannot predict. For example, the death of Soleimani. When the stock market decreases, even though you lose money on the value of your stock investment, but the investment that you have in gold will increase. So that will hopefully balance out instead of having only investments in stocks and bonds. This way, all you have is negatives. Not only are people investing in gold, but also countries. Central banks of Russia, China, Germany, Poland, just to name a few, are buying and hoarding lots and lots of gold for the past year or two. So I don't know about you, but I certainly do not know more than people who work at central banks for countries. And if they're hoarding gold, then there must be a deeper meaning. Maybe something bad could happen in the near future in the stock market. So let's say, what if you cannot go ahead and purchase 1 ounce of gold and spend over $1,500? Well, you're able to purchase half an ounce or even a quarter ounce for a lesser amount. But what if you don't want physical gold? Well, there are other options in which you can buy ETFs, which is just like a stock that has investments in physical gold that is cost per stock and much cheaper compared to an ounce of physical gold. So regardless of what you do, investing in gold tend to have a positive effect on when the stock market goes down. So for today, we covered 2 ways to adapt to the stock market uncertainties. One is to ride it out. If you're a young investor, eventually your losses will come back and you can have on average of 8% growth per year if you invest in an broad index fund. And the second way that I recommend is to invest in gold, which means that even if stock market goes down, the value of your gold will increase. So thank you so much for watching. Please subscribe and like this video and click on the notification bell. Again, my goal is to help you become financial free, which means that you're able to quit your full-time job and not worry about money and pursue something that you have a passion in. Thank you so much for watching.